Imagine this. You wake up, your phone is exploding, news alerts everywhere. Epstein files released. Within minutes, gold jumps. Crypto drops hard. The VIX, the fear index, spikes like a heart attack monitor. Why? Nothing economic changed overnight. No new inflation data, no war announcement, just trust collapsing. Because when powerful names get exposed, markets don't react to gossip. They react to fear, and fear moves money faster than logic. This is not about scandal, it's about capital flight. Let's slow down. What are the Epstein files? They are documents, names, connections, powerful people. Now here's the key. Markets don't care about morality. They care about stability. Financial markets are built on one invisible thing: trust. Trust that elites are in control. Trust that institutions are stable. Trust that rules apply. When those files drop, even if nothing is proven, the story changes. And stories move markets. When trust cracks, money runs. Now let's talk about what actually moved. Gold, crypto, the VIX. Three completely different assets. But they reacted at the same time. That's not random. Gold surges. Why would gold jump? Because gold is boring. It doesn't care about tweets. It doesn't care about court cases. It just sits there. When humans panic, they look for something that doesn't move. Gold is like a financial bunker. If elites are exposed, if institutions look shaky, big money quietly shifts. Crypto drops now. Crypto. Isn't crypto supposed to be anti-elite? Yes, in theory. But here's the problem. Crypto is still risk. When fear spikes, funds don't say, let's buy more volatility. They reduce exposure. Crypto behaves like tech stocks during stress. High upside, high downside. And when margin calls begin, assets that move fast, drop fast. Panic mode, investors sell what they can, not what they want. The VIX explodes now. The VIX. The VIX measures expected volatility. Think of it like a fear thermometer. When the VIX spikes, it means traders are buying protection. They're buying insurance. And insurance only gets expensive when people are scared. No one buys umbrellas on sunny days. When the VIX jumps, fear is already inside the room. Here's where it gets deeper. This isn't about one news event. It's about narrative collapse. If the public starts believing that the elite system is corrupt, two dangerous things happen. Political instability risk rises. Regulatory overreaction risk rises. Markets hate uncertainty, and uncertainty multiplies. Funds start asking, will investigations expand? Will new regulations hit banks? Will global headlines escalate? Even if none of that happens, the possibility is enough. Capital moves before clarity. Markets price risk before truth. Now imagine gold hits $4,000. That's not just a number, that's a message. It signals that confidence in paper systems is weakening. At the same time, crypto dropping signals liquidity stress, and a rising VIX signals institutional hedging. Altogether, that's a stress triangle. When all three align, it's not retail panic, it's structural concern. Here's the simple truth. Markets don't wait for court rulings. They move on perception. When elite trust erodes, money shifts fast. Gold becomes comfort. Crypto becomes risk. The VIX becomes insurance. But here's the twist. Fear spikes rarely last forever. Often, the biggest volatility creates the biggest opportunities. The question is not, is this the end? The real question is, who understands the system better than the headlines? Because markets are emotional in the short term, but logical in the long term. If you understand why money moves, you stop reacting. you start positioning. When trust shakes, watch where capital hides. That's the real story. If you want more breakdowns like this, simple, visual, and honest, subscribe, because the next shock will not come with a warning.